right, do we have volume yet? I need to do a quick volume check and then we hop into this. We do this live stream. We get this crazy day behind us. All right, we got volume, got our fake cigarettes. We're just smoking a pack of bears today, ladies and gentlemen. Smoking the sellers. The bulls, the buyers, we're smoking them out. It's a beautiful thing, a fake cigarette. Something about an oral fixation. It's something that alleviates the stress. After a long day of kicking bare ass, you just have to smoke a pack of sellers. You're just smoking the bears, just every day. Look at this shit. Do you see this motherfucker right? How do you do this? There. It's all inverse. I'm not used to it yet. I'm a fake streamer, obviously. The buyers, the bulls are in control, ladies and gentlemen. This is Chicago in 96, 97. This is bull mania. The buyers maintain control. Is it a blow off top? You let me know in the comment section down below, ladies and gentlemen. Live streamer, live chat. You can leave your thoughts if you tune in. Subscribe at Beta Heuristics. This is the QQQ After the Bell recap for the trading day, Tuesday, April 28th, 2026. It is episode 26 of the series, the 26th QQQ Before the Bell. Didn't exactly provide the most accurate levels, but the range, ironically, intraday, $5.80 compared to the $5.50 target baseline that was provided. The implied volatility baseline, pretty accurate for intraday volatility. Love to see it. So just to dive into the report, how's the camera looking? I spent way too much time. That looks choppy as hell. Fuck it. What are you gonna fucking do, guys? What are you gonna do? You're gonna fucking smoke a fake pack of cigarettes in honor. Rest in piss to the Bears. These guys, they don't know when to quit. I don't know why you're trying to short at all-time highs, but rest in piss. Peace. It's ridiculous. There's nothing more classic market maker activity than selling it overnight. You sell it lower. You convince any market participant that has been lobotomized by this market's volatility, by the headlines. You've lobotomized them. They think we can only sell lower. Then you get the two-directional volatility, reverse, make new highs a day. Actually, excuse me, you didn't make new highs a day. We're making new highs in the pre-market now, actually. But I'll get to that. There's nothing better than coffee and fake cigarettes. It's a beautiful thing. It's alleviating to hold the cigarette. It's just relaxing. Don't do drugs, kids. Just pretend to do them. Pretend. You think the rappers' money they're flexing is real? It's fake money. Anyway. This is the QQQ Before the Bell pre-market report that was provided before the market opened. This report was essentially providing I forgot to update that part. Wow. Well, that's embarrassing. I guess there was no bias. Anyway, QQQ Before the Bell pre-market report arrived in the inbox to subscribers. Feel free to subscribe. You can do so at Beta Heuristics on Substack here. This is the only place you can get it for free to your inbox once you put your email in for free, no charge, providing value to you, the reader. And the entire recap section is just to understand where we are year to date. We're currently up 7.1%. The Monday pivot that held prior, $660.52. The macro context. This is the part that we need to kind of pause at. We have Microsoft earnings, Meta earnings after the bell, and I haven't actually paid attention to that, truly. The Amazon earnings Wednesday, the Alphabet earnings Wednesday, as well as Apple earnings on Thursday. I don't really care about their earnings, truly. The only thing I care about are the Fed comments from Jerome Powell, everyone's favorite lawyer. He's not an economist. He is a lawyer. He works for the Fed, therefore he must be a master of legalese. Now, the FOMC they're either going to cut the rates or keep it the same. Everyone's betting no change. If they actually cut rates, that doesn't inherently mean inflation is going to rise. Anyone that claims an immediate cut of interest rates will induce Weimar Republic hyperinflationary conditions does not understand the lagging effect of interest rates and how it's not an immediate impact. If the Fed actually cut rates and it's that 0.0 or like that 0.1% a chance of occurring, market rallies immediately 2% into the close. It's not even a question. Any interest rate cut would be massively bullish. Keeping rates steady is, to the average market participant, bullish, but to the institutional trader and investor, understanding where are future rates projected to be and changes in the dot plot. Where is the main concern with the Federal Reserve FOMC decision isn't whether rates remain unchanged or not. They're going to remain unchanged. The concern is how bad are the inflationary comments from Powell and the comments on Iran. The two I's, inflation and Iran. Those are the comments. The conflict in the Middle East, he won't actually say Iran outright. He can't say Iran. He'll just say, due to the ongoing energy supply crisis as a result of ongoing conflicts in Middle Eastern countries, there is concern of blah, blah, blah. Transitory inflation, whatever new term they're going to reutilize, that is completely incorrect. Powell will get on stage and perform his legalese nonsense. Inflation will go up if we continue to have less supply of oil. Everything that you consume as a product is transported via petroleum, oil, gasoline, diesel, or it's directly a byproduct or a main component in the product you're consuming or using. So when oil is continued to constrain in its supply, it's natural, given the same demand, oil will go up in price. Everything that is transported via oil goes up in price to reflect that. It's a natural cause and effect. The extent to which it's a correlation versus causation, and it's a lagging effect. Even if we declare we've won in Iran, Mr. President, dear Mr. President, we've won in Iran. You can pull out, Mr. President. Mr. President, you replaced the regime with another regime. Congratulations, you have won. What are we doing, Mr. President? What happened to the plot? What happened to the no new wars? Bombing only military targets. Okay. Anyway, the conflict in the Middle East has subsided for the time being until there's some excuse, some false flag, some bullshit reason to get troops on the ground in Iran. That is the only true method of regime change, and even that isn't guaranteed to work. Go in and just, are we going to run the playbook from Afghanistan? Are we going to assist the Mujahideen that becomes Al-Qaeda and then fight them? Is this what we're going to do? No. Enough. There is no need for Middle Eastern conflict. It serves no benefit to the United States, not to the taxpayer, only to the defense contractors, only to the military-industrial complex and the defense contracting companies, the Lockheed Martins, the Palantirs, the deep state, the companies that operate the deep state. They're the ones that benefit. So invest in that. If you truly want to be a savvy investor seeking alpha, invest in death and destruction and war, because it doesn't matter what the FOMC decides to do. They've already made their decision. They're keeping interest rates the same. 99.9% probability of no change at this meeting. Third consecutive hold. This is holding the line. Federal Reserve lagging, waiting on the data. Data dependent. The Federal Reserve and its data dependency. Ooh-wee. Bullshit. They will hold the line. Inflation is not going to come down reasonably enough for them to cut interest rates. They're going to just hold the line. It doesn't matter if you replace Jerome Powell with another Federal Reserve chairman. How many board seats at the Federal Reserve, huh? Okay. If the Federal Reserve actually falls into Trump's pocket and starts cutting interest rates aggressively, the man has talked about wanting negative interest rates. Does anyone understand what that means? What that would do to risk-on assets? What the things he proposes versus what's actually accomplished are obviously night and day. It is concerning to have a president directly commenting on monetary policy, an aspect of the nation that is not under the jurisdiction of the president. If it is under the jurisdiction of the president and I'm mistaken, let me know in the comment section. Don't shoot the messenger. I'm fairly certain monetary policy is simply the Federal Reserve's jurisdiction. If he wants to talk about fiscal policy, if he wants to go to the Senate and say, hey, we need to change, Congress, we need to change our spending habits, we need to cut spending, which no president in the history of this country will do. You cut spending and then the economy stops moving. That's what happens when you've intertwined government spending with gross domestic product. It is income, net exports minus imports. You have business investment and you have government spending. The sum aggregate of all those factors. One person's spending is another person's income. You take all these components together, and when the government is directly involved in providing people with their income, so that is their spending, that is someone else's then income, and the cycle just repeats. You can't then have cuts in government spending. You just need to continue to inflate, and eventually you collapse the dollar. You transition it onto a stable coin, and then you devalue the stable coin, you devalue the debt. Oopsie. $2 trillion just got eviscerated. Oopsie. How many went up in flames right before 9/11? What was that? What happened? What offices were in the building 7? What was it again? What? Okay. So they can do whatever the hell they want. The average American should not give a single shit about the debt, the national debt. They wave this over your head like a literal gun. They're threatening you every day. Hey, remember this debt? I didn't take this money out. I don't owe jack shit. This interest that's accruing, they're talking about we're throttling towards 40 trillion in national debt. Not my fucking problem. Not my problem, man. They're not going to default on the debt. And they're just going to find a way to devalue it. They have to find a way to bring interest rates lower while not inducing inflation, hyperinflation. That's the dance that they do at the Fed, that they pretend to do at least. We are not Weimar Republic. We can export the inflationary impacts on our currency through the petrodollar as other currencies lose value. We can do that. I'm not saying we should, but come on. The Federal Reserve FOMC meeting that occurs on Wednesday, it's a non-event. Unless Powell actually grows a pair and says something completely and utterly shameless, unless he starts directly commenting about the president, unless Powell's like, we're going to raise rates. Fuck it. Raise the rates. Fuck Trump. You wanted rates lower? Here's a quarter bip higher. Fuck you. If he did that, the market would just shit its pants. And that would be a phenomenal opportunity to be short the market. But that is the 0.001% chance. That's not even a scenario. If we live in that Twilight Zone scenario, fuck yeah. That would be wild to watch. The market just collapse 3% because we're raising rates because of the impacts of inflation due to oil supply shocks in the Middle East. That's not going to happen. They're going to remain steady. That's just how it is. It's a non-event. You keep rates steady. You make comments about data dependency. You make comments about the Middle Eastern conflict without directly commenting on it. And that's the song and dance that the Fed does. They speak legalese. They're not economists. They're lawyers. Jerome Powell does not have a degree in economics. He is a lawyer. Google it if you don't believe me, please. Do your own research. Don't believe what the man on the screen is telling you. The language around inflation, around the Middle East conflict, that's everything. You'll probably see Trump tweet real time or directly after. And those Trump tweets, they may coincide with market volatility. They're not directly driving it. There's correlation versus causation. There's no need to claim that Trump is directly moving the markets. The news that he provides acts as a catalyst that accelerates price moving in the direction that it already was. Disagree with me? Show me data. Come with the data. So, long story short, with the QQQ before the bell report that was issued, the upside levels 662.5, Monday's closing price, Monday's high, and then the extensions above. None of that fucking matters. Not when we have a gap down, and we actually started to try and fill the unfilled gaps from, when is that? Back in the 23rd. So the downside levels, I really underestimated the amount of range and provided very conservative downside extensions down to 656. The session opened 657.41. That's right. We gapped within the range of the extensions, broke below them. The pivot obviously being beneath it, the bull scenario is invalidated. The bear scenario is the standard of it, but that the problem I have with saying the bear scenario is what's valid, and the average retail viewer would then assume you have to have short hedge bias, waiting to trade puts. The market can provide two directional volatility. Having the bear scenario be the current reality, how do I say it? At some point, you're hitting extremes to the downside, and you would rather be buying beneath the market's opening price of the day, if that's also beneath the prior day's open, the prior day's low. If you have enough time, you may be able to retrace back up and retest those prior points. Like, you're beneath yesterday's low, maybe you can back test yesterday's low if you have enough time. If you open lower, continue lower, you have enough time to consolidate, build higher low structure, reverse to higher highs. And that's what the market really did today. So just because the bear scenario is what is fulfilled by price action, because this trend consolidation scenario completely invalid. We broke considerably below that range. The fade scenario, it's not even applicable. The only thing really worth talking about is also the volatility range, where the base scenario, $5.50 versus $5.80 of actual range intraday. It's not bad. It's pretty accurate. I'm off by 30 cents. The anchored sigma deviations, the historical volatility of the closing price, it's showing over the series, the 5 days been fluctuating rapidly. The 21-day, I believe, has peaked based on the recent volatility to the upside. The 63-day, I think, is an accurate representation of more than just the last month's rally, and that's kind of like the normalized extreme sigma deviation. And the 5-day, it will continue to fluctuate rapidly depending on if range just constricts and constricts, or if we actually get compression that results in expansion. The FOMC event could truly be a non-event where all we do is we've opened higher, continue higher, reject those highs, sell a little lower, spend the first half of the trading day in a very tight consolidation range. The retail traders are screaming to have the gap fill, and they're slamming for puts, and the market just is not providing that range because we are in an uptrend. The trend is your friend. If we were in a bear market, I'd be a bear. I'm only a bull because we're in a bull market. I'm smoking on that pack of bears because the bulls are leaving them in the dust day after day after day. It is exhausting to be a bull. Bulls are driven by rage. That is what emotion motivates a bull. The bulls are yet to reach peak rage. This is not a euphoric market. No. Not when we still have potential trillion-dollar IPOs. We are not in a bubble bursting moment. We are still in the inflation of the bubble. And risk-on assets are what benefit from bubbles. It's not rocket science. So if you like this content, subscribe to Beta Heuristics Substack. That's where I'm providing these reports. You put in your email, I get it to you scheduled at 8 a.m. every morning before the market opens. The volatility range, seeing the differences from the start of this series to current sigma values, it's interesting. The whole volatility we've been experiencing to the upside And how much higher can we go? From the lows to the highs year to date, it's basically a 20% move on the NASDAQ. Pretty significant. Is it exhaustion now and we are rolling lower? No one wants to catch a falling knife, so let's be more positioned to the short side. If this is the peak of the bull market euphoria, Powell says something that spooks the market, that's the excuse. Whatever they say at the FOMC meeting, that is the excuse that will be given to retail to justify the volatility or the lack thereof. If we get a very bearish reaction following Powell's comments on Iran or on inflation, the news will claim it is driven by that. It's driven by algorithms. The algorithms are price and time based. It's already predetermined. Part of the reason I'm doing these reports is trying to really illustrate how the markets can be predetermined and you can pinpoint the points of support and resistance. And I am ashamed to say that the downside extensions were very far off. The volatility section was good. I'm going to skip over the earnings. The main thing is just the remaining earnings in FOMC. That's the only thing that I really care about right now. We'll check out the intraday range. So if I had been wiser, I would have been sure to comment and explain that the second downside extension is the 654.5, 654 area. This area here would be the second downside extension. I underestimated the overnight range as well as the intraday range. I'm getting better at estimating intraday range volatility. The problem is understanding the sum volatility overnight as well as intraday. The 10-minute here looks, I think, cleaner. So we're obviously opening on a massive gap down of, I believe, 1%. That's not too massive. We've had much worse. So you're down 1%. At the extreme lows of day, you're down 1.5%. There is a significant, clearly communicated change in structure here. If you're a person that wants to understand investing and trading, it's really important you understand price action interpretation. The candlesticks are telling us what's going to happen before it happens. So the consolidation here, this is occurring. Higher lows versus the low of day. We make a low a day, we're consolidating. From the low here, we make a slightly lower low. 5 cents lower, marginal lower point. You're closing here above that low. How long does it take? You have all this consolidation. It's an hour plus, going on 2 hours before you're getting range breaking upside. The higher low compression compared to this low of day you're holding here, higher lows result in the higher high movement. Currently, we are $659.32. We've had a gap up overnight. This is not exactly a V reversal. Some slight profit taking into the close. You can see that bottom wick. That might be something that's purely, that might be a dark print where it's essentially institutions buying and selling without having a major impact on the index. No, I didn't mean to do that. My mentor used to say drunk driving whenever you're live streaming and making a mistake. Just drunk driving. I'm driving high on nicotine. fake nicotine, fake cigarettes. Smoking them bears. I smoke a pack of bears. See, I'm a NASDAQ bull. I smoke a pack of bears a day. Every day the bears come, doot-de-loot-doo, doot-doo. Here I am, a stupid bear, thinking this market's topped out. I'm going to go short. And then the market makers come and they go, thanks for the cigarette, kid. And they smoke a pack of bears. Nothing beats it. Nothing fucking beats taking the money out of a bear's pocket. Thanks for the lunch money, kid. Anyway. The entire point of this report is to provide the average retail individual who's interested in day trading the NASDAQ, investing in the NASDAQ, how you can approach the market with a consistent view. Your consistent view to the market is the scenarios, how price trades relative to the scenarios, and eventually you can do this without the report. You know, it's a free report. Feel free. Beta Heuristics on Substack. You put your email in, you get the report every 8 a.m. when it's scheduled to go out. I didn't update it before the market opened and didn't include the pre-market gap down. If I had included the second downside extension of being 654 instead of holding closer to the 658 area, 657, I'd feel... 657, 656. I'd feel better about the report's accuracy there. Honestly, mid report, could be better, will be better for you, ladies and gentlemen. That's why you subscribe to the channel. You subscribe to the channel for improvements. You get in the comment section. You say, hey, this is dog shit. You said the second downside extension is $656. Why the fuck is there a low a day that broke below that and continued below? Because I fucked up. I fucked up, truly. I didn't have the second downside extension that is based on the second Fibonacci extension below the prior intraday range. I just use a $1 range band because I was being a conservative cuck. A conservative cuck that is saying the first downside extension is the point at which buyers may step in. Wrong. Second downside extension, the 261. QQQ going to 633 according to Mongo. I appreciate you, Mongo. Shout out Mongo in the live chat. 633. Let's see what that looks like. I'm not going to call you a liar, Mongo, but I'm not going to call you a truther either. We're going to see. We're going to see for ourselves. Let's just go from the low here to this high and understand how much of a decline that is. Are you right? Are you wrong? Time will tell, Mongo. I like that name. So down to $33, you're essentially a decline of 3.25%. Not impossible. I like it. Yes or yes? 633, yes or yes? We'll see. There is that gap to the downside that remains unfilled. So from the close here to the opening price there, you filled most of the gap, most of it, but not the full gap. 633 would fill that gap. It would provide a good opportunity to be short the market and hedge appropriately. Puts would be profitable. It's not a market right now where I'm a bull and I'm going to chase this high. Come on, have some sense. This market can reach exhaustion. It can sell off. That would be a good thing. Hedging appropriately is having not your you don't put your full portfolio in 0 DTEs. No. Understanding that you want time on your side, expirations that are appropriate, your risk management. I'm not a financial advisor. I'm not telling you what to do with your portfolio. Hedging appropriately is based on your risk aversion. How close are you to retirement? How much liquidity do you have? How much liquidity do you need? Your risk aversion, your life, not mine. But if you're like Mongo and you have comments, feel free to leave them in the live chat. $633 on the NASDAQ would be a great opportunity, man. Filling that gap, having some exhaustion, selling off, that'd be perfect. I don't think I have any early warning system sign. I'll show you a little behind the scenes code here. You're not going to get to see what it is, but let's just see. I've got a few of these. I thought this had been going off. That's 1, 2, 3, 4, 5 signals, but that's not immediately true that we will sell. Because when we look back here, getting the sell signal that we were overextended to the upside, that you should see some exhaustion. There's a slight pullback, but then we continued higher. This study does not guarantee a reversal when it starts to see some sell side signals, like right here, it's giving sell side signals, and you start to see a small decline, but you're consolidating at higher lows and moving higher. No study will ever tell you exactly what will or will not happen. It's price action interpretation. That is the only leading indicator. So this might be better on a weekly as well. See, on the weekly time frame, it's just giving that upside buy side signal. You want to be long this market in the rally that unfolds. It's hard to get accurate sell signals while you're in a bull market like this. We've been in a bull market and nothing has really changed. The only thing that's really changed is that the dollar has been printed into further devaluation. So assets that denominate their value in dollars, risk-on assets like stocks, pretty obvious that they would inflate in value to reflect the less valuable dollar. Last study I'll check out just to see if Mongo, if there's anything I can argue that supports that. So you're basically breaching last week's range. It would be interesting to get a move to the downside to 633. I don't see... There is a pretty extreme divergence there, you could argue. So the bear strength, the seller's strength is starting to curl upwards. It's starting to gain strength. That does not in any way, shape, or form mean that this market is going to reverse. It's a very, very early signal, and these studies don't guarantee anything. In the past here, you see that your bull strength, the green line, buyer's strength, is below the midpoint, while the bear strength is above the midpoint. As the bull strength improves and breaks above the midpoint, the buyers are gaining control. A bull trend unfolds. The bear strength declines, broke below the midpoint. Now it's playing the flip of the DSBI, bull strength versus bear strength. That is the whole point of this. So if you have any other tickers you'd like me to check out, feel free to drop them in the comment section. I won't stream for too much longer. The pre-market report for Wednesday will be issued to mailboxes by 8 a.m. That's when it's scheduled to be released. I don't really have anything to comment on the NASDAQ. It's still in a bull trend. The daily strength of trend is to the upside. We can see exhaustion if Powell comes with a hawkish tone, comments on inflation or Iran that are very bearish. They are hawkish for interest rates. The threat of ongoing oil supply chain shocks has real world inflationary impacts. At the Fed, we are concerned. Therefore, we're keeping interest rates steady. Therefore, we are raising interest rates. We wake up in the twilight zone tomorrow. Jerome Powell says, fuck it, we ball. I'm going to raise interest rates. The market goes for a little tumble. Stock market turns into Humpty Dumpty. All because Jerome Powell said, you know what? Fuck you, Trump. You want interest rates cut? How about I do you a better? I'll raise them. I'll raise the interest rates. Just for you. Just because you asked. Market tanks. That reality, we don't live in that reality. That's some other branch off side reality within the multiverse, not our main canon reality. What will happen is comments. They'll be sensational for legalese standpoints, and nothing will really happen. Maybe we'll get some volatility within the first 15, 20 minutes, and then we just compress within that volatile range. There's nothing really to comment on Jerome Powell and the FOMC until we actually see the result of it. Steady rates, nothing's going to change. The NASDAQ will likely, consolidate, react positively if there is any indication that the market will have interest rates cut instead of remaining steady. That would be much more beneficial for the NASDAQ. Steady rates, more of a neutral reaction. Here's Bitcoin. Look at the weekly real quick. So Bitcoin is being a real bitch, and no other way to say this, man. This thing is a sad motherfucker. It somehow rejected 80,000. It rejects the 79,000, 80,000 area that it needs to turn into support. Break above, turn into support. It can't get over the 79,826 level that I've talked about. Until it gets over that, we have no chance of a bull market in 2026. You're in the bear market. You're in a sideways down 10, down 12% for Bitcoin year to date. Year to date, we're down 12% on Bitcoin. No real chance of breaking this until 79,826, 80,000 becomes support. Then you can start to fill this abysmal gap that occurred from the end of January into the start of February. The bane of the bull Bitcoin market and its potential existence, this gap of basically 8%, it's never been the same ever since. We've spent a good amount of time consolidating, holding higher low structure. Backtesting the midpoint would be a test below 79,000. Testing 75,000 support there wouldn't be the worst thing in the world. Testing support, holding higher low structure, breaking higher, that is the only method that Bitcoin has for a pathway higher. Turn higher support, higher lows, holding support relative to higher lows relative to year-to-date lows. Anything else is just, you're stuck sideways. You're stuck with this unfilled gap. It's sad, man. It's really sad to see what the Bitcoin bull market has become. It's this choppy garbage market. There's more volatility trading a proxy like MARA. But, the Bitcoin community, the holders, the hodlers, they couldn't give a shit. They're hodling. They're living their lives, disassociating from Bitcoin because they are hodling. The trader of Bitcoin, the person that is looking for volatility to make alpha off of Bitcoin's volatility, these people are in shambles, man. This is bad. It's bad. The amount of range that you're getting is sad. It's just sad. It's really sad to see what it's become. I don't know what else to say about Bitcoin. It's just... Ever since the Epstein files got released and he's connected to funding the foundation, Bitcoin Foundation, providing money for the people working on the code, he's not getting Bitcoin as a result of it. Maybe, I don't know. He's not influencing the code. Maybe he is influencing it, maybe he's not. I'm not going to claim to know either or. But really, ever since then, people go back and they look at that clip of Dan Pena talking about, if you knew who created Bitcoin, because I know, and if you knew, you couldn't sleep at night. You couldn't sleep until you sell this fucking thing. And it's like, okay, Dan, I get it. You're an eccentric guy. Calm down. Even for him, he's energized. So, makes people think, how much influence did Epstein have in Bitcoin's foundation? Was providing some money all he did? I don't know. Maybe he's got his own node where he's getting his own unique Bitcoin mined just for him. I don't know. I don't care. It's not my problem. Ever since the Epstein files were released, Bitcoin hasn't been the same. When your name is in the Epstein files, it just looks bad. It doesn't matter. So, I got nothing positive to say about Bitcoin until it's above 79,826, above 80,000. Until then, it can fuck off. Truly. Fuck off. I'm considering short hedges on MARA. Short hedges on MARA below $12, below $11, on a back test of 10, on a gap fill all the way back here. If you dislike Peter Thiel, you'll love being short this stock. If you love Peter Thiel, go buy yourself some MARA. Peter Thiel, your favorite, my favorite deep state agent, the PayPal Mafia kid, the Palantir pirate, the MARA Marathon Digital Holdings bullshit. He's your favorite deep state actor. If you want to put your money in the deep state, by all means, invest in this company. I'm not a registered financial advisor. It's not financial advice. Do whatever the hell you want with your money. I am more interested in being short this than long it, given the fact that Bitcoin can't break and hold above 79,000. If Bitcoin can break and hold above 79,000, 78,000 is holding a support, 79,000 tested, turned into support, 80,000 tested, turned to support, then I consider MARA long hedges. Until that happens, neutral, bearish position in the short term. The S&P 500 cash index is really the other thing I wanted to talk about. It will just continue to mirror and follow the NASDAQ. They move in tandem. They have a lot of the same components. It's not a surprise that their daily charts look similar. It's not rocket science, folks. So, I keep thinking that I did not do that. There we go. 10-year yield. This is one thing I wanted to talk about. Not good. Rising rates, no bueno. Es muy mal. Said it last time. Very corny, very cringe, very good. Thank you. Rising rates is not good. The rising of rates constrains the amount of liquidity within the financial system. There's less incentive to invest in businesses. There's less incentive to borrow money at rising interest rates, I should say. As interest rates rise, costs of borrowing rise. The rate at which the national debt, which again, who gives a shit? But that interest on the national debt grows and grows. They're just going to put it on a stable coin and devalue the stable coin. The Russians called it out. I love it. I love it when the Russians just call bullshit. The Russians are like, yeah, it looks like the Trump administration wants to move the U.S. national debt onto a stable coin like Tether, and then you devalue the stable coin. Makes sense. I'm not gonna disagree. I don't smell bullshit. That smells pretty clean to me. Minty fresh. If you disagree, let me know in the chat. If you think the Trump administration or any administration, Kamala Harris, Biden, Obama, is there any potential past or future politician that actually has the brain capacity to solve a national debt problem like the one we have? Truly, I'm asking. I don't think there is. If you know their name, drop it in the chat. Be like Mongo, live in the chat. Shout out Mongo. QQQ going to 633. We'll put a pin in that. Rising rates are constrictive to risk on assets. If rates continue to rise above 4.4% on the 10-year yield, I will shift to a bearish stance on the NASDAQ. I will be open to short hedges. I will react accordingly. React. I am not predicting. No predictions here. If rising rates, then transition to a neutral, bearish stance on risk on assets. Rising rates are not good for risk on assets. It is a cause and effect relationship. We are reacting. We are not predicting here at Beta Heuristics. Very clear, very simple. NVIDIA, good bellwether for the NASDAQ, for the S&P 500. If you're interested, check it out. It's at all-time highs. People have been talking about Poet a lot. This thing has had a pretty wild move. I think there was a change in contract. A contract was canceled with another company, and that contract was rather profitable for Poet. It was a rather substantial contract collaboration, and that collapse of the business-to-business deal resulted in that move over the weekend. Having a move overnight of down 36%, you're closing the day down 47%. Rough. Rough for the investor. Great range for the trader, but not good for the investor. Not sure what else to cover. If you have any tickers you'd like me to review, drop them in the chat. I think my show trades are off. Yeah, my show trades are off. That's good. Very good. This ticker, or this contract is something that I've been, instead of being directly invested in Poet, hedging the portfolio with Poet contracts is one possibility. Look at this real quick. It's not doing much. Circle should be declining. That's nice to see. Has this thing... Oh, it's still going. Yeah, amazing. Truly amazing. Oxy getting some relief. No, it's back upside. Nice. This thing is a tech stock that is really, really a bucket of shit. Real bucket of shit. Glad I'm not a shareholder. USAR, Rare Earth Inc., worth paying attention to. Uranium, one commodity I have no exposure to, but think it's worth global funds, though. Oh, yeah, it's an ETF, that's right. Let me see. Not anything really jumping out at me. If AVAV can start to consolidate, maybe into May, by maybe June, you can look for a retracement higher. It's done a lot of range. If it can consolidate, I would be interested. But again, this is not financial advice. I'm just scrolling through my watch list looking for different ideas, anything that kind of jumps out at me. Nothing really interesting, though. Netflix, I mean, it was great to the short side on that, but it's hard to really... That's a contrarian trade. Silver's nothing interesting. That's not interesting. PayPal. PayPal as a short hedge might be the call out that I am not going to make because I'm not providing financial advice. But looking at this, I like the potential for PayPal to decline further. It's just how much range is that truly is. It's pretty limited. If you're back testing the midpoint, that's 8% decline, $4. If you're testing the low, that's down 22%, $11. I don't know if it's worth that risk to reward. Anyway, I've gone off on way too many side tangents. This was a late stream to start because I was messing with my camera for way too long. If you like this content, feel free to like, comment, like Mongo in the live chat. Shout out to Mongo. Appreciate you. There's no other tickers that I think are really interesting to review. Go back to Bitcoin, see where we're at. I'm getting more and more interested in hedging short on everyone's favorite cryptocurrency because in my eyes, it's in a bear market. Is this camera focused or what? I thought I was looking really blurry for a second. There's nothing positive to say about Bitcoin as of now. Until it can break above 79,000, 80,000, I am remaining bearish. There is this potential for the bull and bear strength to flip. And if that occurs, could be a knife down, stairs up, escalator down scenario, potentially. Not a guarantee. Not providing any financial advice. Again, this has been a recap also of the QQQ Before the Bell report that was provided, episode 26. Episode 27 will be in inboxes at 8 a.m. tomorrow, April 29th. If you would like to have that in your mailbox, please subscribe at Beta Heuristics on Substack. Beta Heuristics on Substack for all your QQQ Before the Bell needs. You can leave your comments, thoughts, criticism, critiques there. Until